Welcome back, everybody. You're listening to the Northern Miner Podcast, and I'm your host, Matthew Keeble. And I hope everybody outside of BC had a great family day long weekend. We had it last week, as people probably know, but the rest of Canada, I hope you had a good long weekend. We missed you. But welcome back. We do have a pretty good show coming up this week. Actually, come on, it's a great show. Lesley's going to drop in for the Geology Corner. We're going to talk a little bit about preliminary economic assessments, feasibility studies, and what investors should look for in terms of things like equivalency grades, and certain like aspects about metallurgy and things you should look at in economic studies if you're looking to invest in a company that's closing in on that development stage. Meanwhile, I also have a little bit of audio from a phone interview I did with the president and CEO of a new interesting-looking zinc deal called Adventus Zinc. Now, this is president and CEO Christian Kargl-Simard, and he's going to talk a little bit about A, putting the Adventus vehicle together, and B, about the zinc investment thesis and why we talked about this at length in previous episodes, but why the zinc cycle may be a bit different than what we've seen over the past decade. If people recall, the last time zinc approached, around $2 was around 2006, 2007. Since then, it's been a pretty tepid market with prices staying well below $1 for a large majority of it. But we've seen a recent rally. So we'll talk to Christian a little bit about the Adventus Zinc vehicle, which sort of caught my eye because it's actually, essentially an IPO with properties from Adventus Minerals, a prospect generator and big royalty company out of Eastern Canada. They put the properties from Ireland and the Bathurst camp into Adventus, and also some cash in the form of the seed financing and private placements, etc. And they also have investment from Resource Capital Funds, who we know is sort of a bigger base metal player. They have some money in Wellgreen Platinum, for example, as well as a variety of other projects across Canada, but RCF's involved. And then Greenstone Capital, who's a private equity outfit out of the UK, who I'm familiar with as well. So they have some institutional backing that makes it pretty interesting. So we'll get a little bit of comment from Christian on Adventus, and also how they're sort of like an acquisition vehicle. So they're looking for a way to sort of mobilize some of this institutional capital. So it's an interesting interview. But before we get into that, I just thought I'd crack through our macro really quickly, just because there is some ongoing issues we should mention. One, last week we did dig into at length the copper supply concerns. Nothing has really happened to alleviate that. In fact, BHP Billiton's situation at Escondida in Chile appears to be getting a little bit more stressed, and the negotiations with the labor unions is not going particularly well. Apparently, I got a note from Scotiabank this morning that a government-mediated meeting between BHP and the striking workers has failed. And the company it was not available for comment, but so there is no sign of sort of light at the end of the tunnel for the Escondida strike at this point in time. Further complicating matters for copper supply, Freeport-McMoRan is now threatening to sue Indonesia over the mine dispute over Grasberg. So this is just another thing just to sort of tick the boxes here as we sort of see that supply tightening going on in the copper space. And that's one of the things that's really driven some of these price increases we've seen. Copper was up at almost $2.75 per pound at the time of recording. Meanwhile, gold was at $1,238 per ounce. Silver was at $17.99 per ounce. And West Texas Intermediate was trading at $54.11 per barrel. Now, in terms of gold, we'll just mention this really, really briefly. The big thing we're looking at is a upcoming rate increase in the U.S. Scotiabank also noted that the heads of 5 regional U.S. Fed branches are scheduled to speak this week. The U.S. dollar has been rallying sharply after 2 Fed members suggested that a March rate hike is a strong possibility. So markets, be on the lookout for clues in the federal meeting minutes tomorrow. So just keep your eyes on that. In terms of gold, if we want to get into a little bit more industrials, iron ore, China's strengthening steel market continues to prop up iron ore prices. Seaborne reaching about $95 per ton, and domestic iron ore on reaching about $106 per ton. That surge also came despite BHP warning that iron ore prices could move lower to inventory levels. So just some stuff to watch in terms of iron ore. On the met coal front, prices for seaborne coking coal bounced off recent lows of about $150 per ton. We're trading at about $157 per ton at the time of recording. of recording. And so that wraps up our macro for the week. And without further ado, I think we're going to get right into the Geology Corner. This is Lesley talking a little bit about vetting technical reports and sort of some common tricks companies might use to make their deposit look more economic than it might actually be in reality. These include considerations like sociopolitics and also metallurgy, grade distribution, things like that. So I'll let Lesley get into that. And on the flip side, I will just again intro the Adventus Zinc comments, and we'll run those as well. So I'll see you in a bit.
For this week's podcast, we're going to step back from the geology, right, and get a little bird eye view on what actually makes a deposit economic.
Oh, okay.
Dun, dun, dun.
Nice.
So, as Aristotle once said, the whole is greater than the sum of its parts.
Yep, I remember.
So we're going to talk about everything from political risks, remoteness, engineering challenges, metallurgy, all the things that actually make a world-class deposit world-class, and what you need to know to perhaps spot the imposters.
That's a good skill to have.
Yeah, just to kick it off, I guess we'll talk about manipulating numbers. So say you have a 50 million ounce gold, 50 million ton copper porphyry deposit that's in a super remote region, and it's an advanced stage project. The company wants to put in production, perhaps has a PEA, and the numbers look great. But the question is, well, are they?
Probably not.
Right. So companies are actually able to skirt around some of their economic issues by manipulating numbers in their economic studies. So one particular way to hide a marginal economic deposit is by cranking up the mining throughput and decreasing the cutoff grade. So by doing that, a company can lower its unit cost by, pitching a 120,000 tons per day mill. So the project looks like it has an operating profit, but all the money was sunk in the capital expenditures up front. And remember, numbers in PEAs are super crude. There's a lot of wiggle room there to generate a favorable outcome. If the report is at PFS or feasibility stage, then everything becomes a lot more defined. And then the wiggle room there to boost NPV and IRR is probably the price of metals used in the report.
Yep, that's popular.
Yep, that's super popular. So, and second, talking about manipulating numbers, on to the next thing when it comes to communication. Copper equivalence is not exactly a reliable gauge on the grade of the deposit. Another way to make a deposit look better than what it is to report everything in equivalence. Ron Nedelitsky, that famous explorer who found Snip and Eskay Creek, he once said to me, he's like, Lesley, I really like gold equivalence. It means I can add silica to it.
Silica. Oh, there you go.
And of course, he was joking. But, it's funny because it's common for companies to add metals into their equivalents that they won't be able to recover, even if it went to mining, just to increase their grade. So in other circumstances, of course, using equivalents is totally normal. Just be sure to check the fine print to ensure the company is using reasonable prices. Totally. This leads me to the third item. The amount of resource in the ground is not equivalent to the amount of metal that comes out. Right? Funny. I've seen some resource calculations assume 100% recovery of the metal, which is an illusion because it's impossible for that to happen. In fact, Northern Dynasty, I looked at their mineral statement, and they assume 100% recovery, which I didn't know. Very interesting. So if you have a company that says there's 8 million ounces of gold in the ground, but may only recover 5 million ounces of gold out of it because of metallurgical issues that prevent gold from being recovered during processing. The same thing goes for copper, of course. So again, for investors, check the resource statement for the fine print that says how much of the metal is recoverable, and check the metallurgy. Yeah. Like you said.
And as we learned in the recent Arizona mining brouhaha, check out for smelter penalties and byproducts that might be detrimental to downstream products as well.
Yeah, this is other stuff.
Yeah.
So number 4, this is the next one. How the company plans to process the ore.
Yep.
I love these. I'm doing this funny like. I'm really getting into this. So whether the company plans to produce its own doré or send the concentrate to a smelter can affect the project's economics, like you just alluded to.
Very much.
If your gold goes to a smelter, you have to pay the smelter. So the company could end up getting maybe 70% of the revenue. Whereas if a company produces its own doré, then they get 100% of that cash. So if a company goes with a smelter, out of that 5 million ounces they were able to recover from that 8 million ounce deposit, they're only generating revenue from maybe 3.5 million ounces of gold. So it's perhaps not so much of a world-class deposit or world-class investment as an investor had initially hoped. The domino effect here, that's important to pay attention to, and I'm only seriously skipping the surface. And these are sorts of things that, like the analysts, that the really experienced analysts take into account when they visit these projects and they inquire about. If you ever go on a site visit with analysts, these are the questions that they're asking. But anyway, let's get back to this 50 million ounce gold, 50 million ton copper, or 50 million pound copper gold deposit that the company wants to produce at a whopping rate of 120,000 tons per day. So let's think of it here. When a company is hoping to develop a huge deposit like that, it's going to require a massive tailings dam and a ton of infrastructure. It basically becomes a lightning bolt for anti-mining groups and regulatory issues.
Well, that's like last week. Remember when we had our friend Mickey Fulp, the mercenary geologist, on, he mentioned Pebble East because they can mine that underground, which he said might be a little bit easier to permit, but also potentially more economic, right?
Totally, and that's one of the examples of how so many of these world-class ore bodies get sterilized because of local opposition. Northern Dynasty, clearly one. Barrick's Pascua-Lama is another star example. So for a project of that scale, it's important to take a look around at the environmental risks and, of course, see if there's any local or indigenous opposition to the project, because they can certainly erect some roadblocks, like literally and figuratively, and prevent any world-class deposit from seeing the light of day.
Yep.
Now, of course, the big risk here is political, right? If the project is in a politically unstable country, then you want to get in and out of there as fast as you can. And there's three things. Number one, high grade. Number two, high grade. Number three, high grade. And that's why the Congo works so well, because copper deposits there are 3% copper. So you can mine it, get a quick payback on your investment capital, and then you can sit back and relax a little more because you're in the green.
It's all free cash flow.
It's all free cash flow. But sometimes even getting investment capital can be really difficult if a company wants to operate in a risky country, because that cost of capital goes up on interest rates alone, because the banks won't lend money to companies at the same rates as they would for companies who want to build a mine in Ontario. Right?
Yep.
So, and lastly, water, power, and export. So, a big little bit of bag here. It's all super important when trying to get metals from a world-class deposit to the world. And if you haven't noticed, much of none of it's in Northwest Territories ore production is from diamonds and gold. And that's because diamonds and gold mines can overcome the remoteness because they're shipping out these little itty-bitty stones in small gold bars.
So you said infrastructure's not a big problem when you can take your stuff out in a suitcase.
A suitcase.
Yeah, that's what everyone always says. You can take the dory out in a suitcase, you're probably all right.
Then your best kind. It'd be like $50 extra charge at the Air Canada flight desk when you're going home.
Don't tell anybody.
Yeah, just why is it? I'll just put this extra heavy baggage tag on your thing.
Yeah, that's what charters are for.
Yeah. So whereas all the former base metal mines up there, like Polaris, right? None of it. If you notice, they're all along the coast. That's because they ship their concentrate out super easily.
Yep.
So you'd be hard pressed to get a VMS in production that far north if it's inland.
Yes.
So something else to really think about for the average investor. And of course you need water, power to run a mine, and some regions of the world don't have much of either, and sometimes they even have too much water. So one example, Zambia, First Quantum had to shut down one of their mines there a year ago because the local power grid got maxed out. Sentinel, thank you. Yeah. And a lot of projects aren't going forward because there's no power to get them on the go.
That's an interesting point, though, when
crazy.
Your project can tap out an entire domestic power grid. That's when you know you're helping with infrastructure, probably.
Yeah. Oh, gosh.
Yeah.
So, and then on the other end, we know the water in Chile is a huge issue. issue and can strap on like massive capex to a project, especially if you have to desalinate from the ocean and you name it. And of course, there's some countries that just have too much water. So, your giant 120,000 ton per day tailings facility sort of thing. It's in this tropical rainforest. I mean, what's water going to do to that? So, of course, that puts on extra cost on your engineering. So, I know I've been rambling. I know it all sounds super negative. And everything I've said, it's a shocking wonder that we even have mines in the first place.
Not really. Like you said, grade can overcome a lot of things.
Totally.
Yeah.
So a true world-class deposit, especially driven by the right team, will overcome all of these issues and become a win-win for everyone and everything involved. There's no doubt about it. So my word for advice today to anybody who has been listening, if investors want to put money into a company with an advanced stage target, maybe you ought to find a competent analyst and get their report from them before deciding their next move. Because if you don't, you could just be throwing a bone to a dog.
Or get a subscription to the Northern Miner.
That's right.
Yeah.
You've been taking words out of my mouth all the time. Totally. Get a subscription to the Northern Miner. And the reason why is because we actually do our homework when we cover companies. And we speak to heaps of people to ensure we're touching on all the right issues. And there's seriously nobody else out there like us. And I'm not saying that because I'm biased. I'm an honest, genuine woman. And I will always speak the truth. And that's the truth for me.
And I don't like anything.
What do you mean?
I just don't like any projects.
Oh.
Until they're actually in production and making free cash flow. I'm like, I don't know. Yeah.
That's funny.
Always a cynic.
Always be a cynic, yeah. But, on the other end, for earlier stage targets like our Greenfields friends, I'm a really big believer in just letting them grow into their own right before making any convicting judgment calls on the political climate, infrastructure, local opposition, environment. You wouldn't give a 5-year-old braces until their teeth have actually grown into place. So please don't oppress a Greenfields exploration play with any preconceived notions on what it may actually become. But that's me. I'm a contrarian at heart.
Well, the big thing you're hearing now from a lot of explorers is you've got to start your social license. And I hate that term, by the way, but you've got to start that process really early.
Right away.
Yeah, it's
so
something you should
invest
in right up front. Right?
Yeah, it's like anything. You don't want somebody coming into your community and just creating something without even talking to the community, without anybody talking to you about it. It's like if someone came into Strathcona and decided to put like
a railway or something.
Yeah.
Actually, they just reactivated that railway from the port along Clark.
Oh.
It's annoying.
Oh.
They didn't ask.
But
that's the city. That's the city.
But anyway, you have been listening to the Northern Miners Geology Podcast. Not so much geology today, but definitely a little bit of a broader look.
Yeah, I think it's pretty topical given what's come out with Northern Dynasty and the Kerrisdale short report and all that fun stuff.
Yeah.
And we're talking about a lot of, as metal prices have gone out, a lot of these projects are sort of coming back to the forefront.
Porphyry coppers are coming back to the forefront, and they're all world class. So it's always a matter of.
It's a very popular compound adjective amongst development stage copper gold companies. So, but yes, this has been the Geology Corner, and we will talk to you next week.
And welcome back to studio. Lesley said that wasn't geology related, but I think it was nicely geology related. So it's another great Geology Corner. Thanks again to Lesley for dropping in and giving us a few tips and tricks in terms of sort of wading through those 43101 reports, which can be absolute behemoths. So yeah, do check that out. Also, as mentioned during the segment, please do surf over to northernminer.com. Check out our subscription section. Totally worth it, and you get to read a lot of really cool exclusive interviews with CEOs, get exposure to some things you might not otherwise. And as always, please do like us on Facebook, follow us on Twitter, check out our YouTube channel, and leave us some comments on SoundCloud as well, because we're always like to hear from listeners. So now let's fast forward here to a little bit of a segment on Adventus Zinc. As noted, it's an interesting new vehicle that has seems to have capital to deploy in terms of picking up zinc assets. One of the things I had a chance to talk to the president and CEO, as mentioned previously, and the one thing we talked about, which he will get into, Christian will get into in the segment, is that there's really a lack of sort of large-scale zinc projects that are, publicly listed or available. A lot of them are not in junior companies. There's been a real dearth of exploration capital in the zinc space over the past decade. So now that we're seeing sort of the corner turn, specifically on the supply side, which we'll also get into during the segment, there's more attention being paid to where the next stage of zinc development assets is going to come from. And Adventus is one of the companies that's hoping to step into that gap and pick up some of these projects and advance them and have them ready for when we need, which is probably coming up pretty quickly, some new zinc projects to meet the galvanized steel supply demand, I should say, etc. Let's get into it. There's just a few. It's a short little clip from a phone interview I did with Christian. So this is a new segment straight from the phone. So do forgive if the recording quality is a little bit lower than studio. But nevertheless, the information is super valuable, and it's a really interesting introduction to a new zinc vehicle. As Christian will mention he actually doesn't mention it during the segment, but he was previously an investment banker at Raymond James. So he has a background in the sort of following the commodity cycle as well. So he has some interesting things to say about that. So I will run this, and I'll see you on the other side just to say goodbye and wrap the show up.
We worked on the business plan in the second half of last year, where we would use those properties as a basis to go public. We'd, of course, do work on them. They're excellent properties. But we'd also have a complementary business plan where we'd want to become, or we've become the premier publicly listed zinc acquisition vehicle. Okay. And in order for that to come into play, we needed to really work on credibility. So everything we've done to date is about credibility, and that leads, number one, with our shareholder register. So we have 3 strategic shareholders. First one is Resource Capital Funds, which I'm sure you're aware of. We are their zinc acquisition vehicle of choice. And then Greenstone Resources, which is a private equity group out of London, put some money in, and we are also their zinc acquisition vehicle of choice. They are a group of base metal investors primarily, and they realized base metals as a economies of scale type of game. And with the size of fund, they couldn't really tackle larger projects, in particular in zinc. And they wanted to combine their money with other like-minded investors. The types of projects we're looking for, generally, number one, first and second world countries. Number two, it has to be only sulfide resources. We're not looking at any oxides or sulfates. And really, when I go through this criteria with you, it's all based on down the road. If we're fortunate to be in a position where we can sell the company, or there's a lot of interest to buy us, we're trying to maximize the potential M&A interest at that time. And we believe that sulfide deposits are the way to go, not oxides or sulfates. In terms of size of potential production, we're looking at 100,000 tons per annum of zinc production per year. Most publicly listed kind of junior developers have projects that have significantly lower production rates than that. Only one that really easily beats that is Arizona Mining. And part of the thesis of creating this company is to create another strong zinc vehicle for investors to invest in that has scale of production, potential scale of production, scale of resource, and will cater to the institutional investors. Zinc demand story is kind of a boring story. About over 60% of zinc goes to galvanized steel for vehicles. That's a dirty business. Zinc is a metal that's growing at maybe 2 to 3% a year. So there's no real new use for it, but at the same time, there's no substitution for zinc. What is the real driver for this longer peak of the cycle is the fact that over the last few years, so since 2015 and going to the end of this decade, about 1.2 million tons of zinc production is coming off the market. And this is coming off the market from some major mines that have been in production, some of them in production for many decades. So in particular, Century, Brunswick, Scorpion, Lachine. So the overall primary zinc market is only around 13 million tons a year, and you've taken 1.2 million tons out in a very short time frame, and now you have some catch up to do. So as you know, mines can't start up overnight, especially when there's been a lack of investment for so many decades, and hence this is why the situation is brewing, I guess you could say. In general, the projects that are in junior public companies, they're the size of maybe 30 to 75,000 tons per annum of zinc. Yeah. And so you need a lot of those mines to make up 1.2 million.
And welcome back to studio. So yeah, that was a good chat, not just on the company Adventus, but also the general zinc market, which has been getting a lot of buzz heading into 2017. We've seen some of Teck Resources, big Canadian majors, marketing material, touting zinc. Glencore has been mentioning zinc exposure. So it is sort of a buzzing commodity right now. If people recall, at the Vancouver Resource Investment Conference, Brent Cook and Joe Mazumdar also mentioned, watch out for a lot of new public zinc vehicles at PDAC. So I'll keep our eyes open for that. But once again, this has been the show. Thanks very much for listening to the Northern Miner Podcast. We do appreciate it. Please do check us out on social media. And this has been Matthew Keeble. I'll talk to you next week.